Good morning. Welcome to Market Day Report. It's, let's see, Monday, Tuesday. Is it Wednesday already? Hard to believe, but we're glad you're here with us this morning. All right. We're going to talk about flash sales. We call these sales reported by USDA overnight. And we'll talk more about that in just a moment with Brian Hoops. First off, let's see how markets traded in the overnight session. We'll start with corn in the red, down a penny 3/4 at 426 3/4. March contract was penny and a half lower. What about soybeans? November down 8 1/4, 10.03 1/2. Lost the 10 handle for a while, but settled above that. And again, that's where we'll open this morning. Let's go over to the wheat market. July contracts sell-off kind of continues there, down another 7 cents on the July at 577 3/4. July hard red down 6 1/2, 572 3/4. And for spring wheat, December contract off 4, 573 3/4. Wet conditions have really slowed down the harvest for cotton and what's left there. Heard a report yesterday as it appears as though abandonment now 34% across that West Texas region. In spite of that, cotton down 39 points, 68.38. All right, we talked those flash sales earlier, and here to help us explain what they are, President, Midwest Market Solutions, Brian Hoops. Let's talk flash sales now.
Yeah, good morning, Tony. We did have some more sales of corn. We had that one that's strangely worded. It was received and then sold during the reporting period to an unknown destination, about 291,000 metric tons of corn. So that appears that we imported it into the country and then exported it right back out. There was also a big sale of about 401,000 corn to Mexico. So in total, that's around 27 million bushels, although not all that is going to count against our ending stocks. But it's certainly an indication that Mexico's not done buying U.S. corn at this point in time. And some of our foreign buyers, they're looking for product as well from us. Now, the concern would be we haven't seen much in the way of soybean sales. We didn't have anything this morning. So maybe soybean sales starting to slow. We're always trying to anticipate how much China is going to buy from us. They've bought similar amounts of what they bought last year. They may not be an aggressive buyer going forward unless there is some crop issues in South America. And right now, things look really ideal for both Brazil and Argentina. We went into this December, late November, early December timeframe looking at drier conditions a year ago in Argentina, and that's what really kind of spiked soybean meal futures and pushed them sharply higher because we had a lot more demand with Argentina, the world's #1 exporter of soybean meal, under some stress. This year, it's the complete opposite. Soybean meal is at contract lows already. Soybeans are not there. Soybean oil is not there. Soybean meal is, anticipating that, once again, Argentina is going to have a big crop of soybeans. They're going to resume that leadership role of exports. And so, you've got that on the screen there. We're down in the overnight. It's a drag to soybeans, no doubt, and kind of pulling corn lower as well. So it's, about this time last year, about the 15th of November or so, that the grain markets peaked out and then turned lower as we went into the first part of the year.
You mentioned that soybean meal contract off 24% year to date, and soy oil down 4.8%, though it's been higher month over month. All right, we've been talking the row crops so far. Let's come back and talk four-legged friends. It's cattle and hogs. Market Day Report continues in a moment. All right, so we're starting the week with cash bids. No, not bids, asking prices. This is what producers want to get for their animals. The asking price, $188 to $189. Will it happen? Well, we don't know for sure, but doesn't hurt to ask, right? I guess there's some might be asking $195. Whether or not they'll get that is, I bet that doesn't happen. We'll talk to Brian Hoops in just a moment. We'll talk cash cattle sales, and that in just a moment. First off, let's see how the live cattle market settled yesterday. Bit of a rally as the December gained 70 cents to 184.40. February, 186.12. That was 75 higher. What about the feeder market? Well, feeders were higher as well. You know, that feeder market up 10.6% year to date and just continuing to move higher after, well, this month being just a fraction lower. Again, feeders 132 higher on the January at 243.57. Let's go to the hog market. It's really had a good year too. 21% gains for the hogs. December up 57 in the session yesterday, 82.35, and 4 dimes higher on February, 86.32. Let's bring back in Brian Hoops, Midwest Market Solutions. All right, one thing to ask for something, another to actually get it sold. So asking prices for cattle this week, $189. What's your thoughts?
Well, maybe that 189 is somewhat doable. You know, we were 187 in the Southern Plains last week. I think you're going to come closer to that 187 this week, just from the standpoint that Packers do have a in the red type margins that they're working with, so they don't really want to chase the cash markets higher. They're trying to cut kills a little bit. We're about 13,000 heads slower than we were a week ago, and that's helping to prop up those box beef. But until we see a big jump in that box beef, their margins really aren't going to improve very much. So don't look for them to pay a lot higher in the cash markets. Today's the last day of the Goldman roll, where traders, especially the long funds, rolling out of long December positions into February or April or some other month. That's put a little pressure against December. That should fade after today's close. And you had CPI numbers that came out this morning, and on the surface, they're 2.6%. Which is what trade had expected. But you look at in the numbers, car insurance is over 14% higher, car repairs about 6% higher, and near the middle of the pack on that list, food away from home inflation is about 4% above year ago. So that means people eating out or eating in restaurants, and that certainly affects consumer demand of beef and steaks at these higher levels. They're paying 4% more than they were a year ago for that type of enjoyment or dining. And that's, you know, compared to all these other expenses that are much, much higher, such as cars and home and rent and that sort of thing. So it's going to be a struggle for the consumer to keep up with where they were as far as demand goes a year ago with these higher prices that they're facing.
All right, speaking of keeping up, how about we carry this conversation into tomorrow? We'll see you back here in the morning. Right. Brian Hoops, Midwest Market Solutions.